Somewhere tonight, a stranger might be signing your name on a piece of paper, and the county office that stamps it official has no idea it isn't really you.
That sentence sounds like fiction. It isn't.
It's a real, documented, growing category of property crime, and the people most exposed to it are the ones who feel the safest homeowners who just made their very last mortgage payment.
Because the moment your loan hits zero, something changes about how your house looks to the outside world, and it has nothing to do with paint or landscaping. Let's talk numbers first, because numbers make this real instead of theoretical. Recent industry tracking puts the average equity sitting behind a still, mortgaged home at roughly $300,000.
Run that through a simple 4% withdrawal assumption, the same math retirement planners use, and you get somewhere around $12,000 a year in theoretical portfolio income just sitting in brick and
drywall. Now imagine that home has zero debt left on it. That's not a small nest egg. That's a walking, sleeping garage having target.
Here's the part almost nobody explains clearly. Paying off your house does not make your title more protected.
It makes it more attractive. A paid-off home isn't safer, it's just quieter. Quieter because the monthly statement disappears.
Quieter because nobody's calling to remind you the loan exists.
And in that silence, a very old, very boring piece of government paperwork becomes the last line of defense, or the last unguarded door. So what's the actual document a criminal uses, usually something called a quitclaim deed? Don't let the name scare you. It's a completely normal, everyday legal tool.
Families use it to move property between relatives. Divorced couples use it to untangle joint ownership.
Estate planners use it to shift a house into a trust. On its own, a quitclaim deed is boring in the best possible way.
The catch is buried in one sentence of legal language. A quitclaim deed transfers whatever interest the signer claims to have, no guarantee, no title search, no promise the signature is even real.
That's efficient when everyone involved is honest. It's a gaping hole when they're not.
Here's a question worth sitting with for a second. Who actually checks whether the signature on that deed is genuinely yours?
not who you'd assume. County recording offices, sometimes called the recorder, the register of deeds, the clerk, depending where you live, exist to file documents, not investigate them.
Their own public guidance in more than one jurisdiction states plainly that they check whether a form is filled out correctly.
They are not equipped, staffed, or legally empowered to run forensic handwriting analysis on every deed that crosses the counter.
One county clerk's office described its own role using a word that should make every homeowner sit up straight: ministerial.
Meaning we process paperwork, we don't police it. That's not negligence.
Think about the sheer volume: deeds, liens, mortgage releases, easements, court judgments, flowing through one office every single day.
Turning each one into a criminal investigation would grind property transactions in an entire county to a halt.
The system trusts the paper. That trust is exactly what a forger is counting on. Once a forged deed gets filed and indexed, something strange happens. Two versions of reality now exist side by side.
In a legal sense, nothing has actually changed. A forged signature doesn't transfer real ownership, no matter how official the stamp looks.
But in the practical, searchable, public record sense, your title now looks clouded. Anyone pulling that chain of title sees a document claiming someone else has a stake in your house.
And the fraudster isn't dreaming of moving a couch into your living room.
The real play is faster and colder. List the property for a quick sale, apply for a construction loan against your equity, or rent it out to a tenant who has no idea anything is wrong.
They don't want your home. They want the paper trail that makes it sellable.
One documented case involved a forged deed on a mortgage. Free property supporting a fraudulent construction loan north of $500,000.
That's the ceiling of what just paperwork can cost you. Why do fraudsters specifically hunt homes with no mortgage left? Because an existing loan means an existing lender, another set of eyes, another party with money on the line, another layer of friction.
A paid off home has no one else watching, no bank statement arriving to flag a change, no monthly reminder that says, hey, someone's checking on this asset.
Just you, your keys, and a filing cabinet 3 towns away that may or may not still reflect reality.
Now here's the genuinely unsettling part, the part that separates this from a stolen credit card. A stolen card shows up on a statement you already checked.
The stolen title shows up. Know where you'd normally look. Your key still works. Your furniture is still there.
The lawn still needs mowing. There's no moment where the fraud announces itself. The only thing that's changed is a database entry in a records office you've probably never once visited.
That gap between the document is filed, and you find out, is the entire game. Criminals don't need weeks.
Sometimes they need days to attempt a sale, a loan, or a lease before anyone notices something's wrong.
Let's talk about scale, because the honest numbers matter more than scary headlines.
Federal crime reporting logs tens of thousands of complaints a year in the broad real estate fraud category, with losses well into the hundreds of millions, though that category blends several
types of scams, not just deed forgery specifically, so treat any single number with appropriate caution.
What the insurance industry's own claims data shows is arguably more useful. Forgery and fraud-related title claims have, on average, cost roughly 5 times more to resolve than an ordinary title claim, often landing well over $100,000 once legal defense and investigation costs are folded in. The paperwork is quiet.
The cleanup bill is not. Can you just call the county and get a fake deed erased? No, and this surprises almost everyone.
A recording office generally has no authority to delete a filed document just because you say it's fraudulent.
Undoing it typically requires a formal legal process, a lawsuit to quiet title, possibly a criminal case, sometimes a corrective filing from an authorized party, or a judge's order. An uncontested version of that legal fight commonly runs somewhere in the low thousands of dollars and can still take several months.
A contested one, with an actual defendant fighting back, can stretch past a year and climb into the tens of thousands.
Filing the bad document, minutes, undoing it, potentially a year and a half of your life. That's not a hypothetical.
In one widely reported Florida case, a homeowner's security camera had already caught suspicious activity near their property before a forged quitclaim deed was filed against it.
Because they'd enrolled in their county's free title monitoring alert, they found out within 48 hours instead of months or years later.
Even with that fast discovery, restoring clean legal ownership still took roughly a year and a half of court proceedings.
The person behind the forgery was eventually sentenced to 15 years in prison for targeting multiple properties the same way.
That case is the whole lesson in miniature. Early discovery doesn't make the fight disappear. It just means you're fighting from a much stronger position, with fresh evidence and a much shorter window during which anyone could act on the fake filing. So here's the actual fix. And it costs nothing in most places.
Many county recording offices, and by law, in some states this is guaranteed, offer a free title, alert, or property fraud alert service.
You register your name and sometimes your property address or parcel number, and the system watches for any new document filed against those records.
If something gets recorded, you get an email, a text, or a call, usually within a day or two. It will not stop a forger from filing a document in the first place. It cannot verify a signature is genuinely yours. It cannot pay your legal bills. It's a smoke alarm, not a fire extinguisher.
What it does is collapse the discovery window from months or years down to hours or days. And in this specific kind of fraud, time is the entire battlefield.
How do you actually set this up? Search your county's name plus the words Property Fraud Alert or Title Alert.
And go straight to the official county government website, never a random third-party link that shows up first in search results.
Some counties partner with a private vendor for this service, and that's normal, but confirm it through your county's own site first.
The whole process in counties that offer it online typically takes about 5 minutes.
If you own property in more than one county, you'll need to register separately in each one. The systems don't talk to each other.
If your county doesn't offer an automated alert at all, don't just shrug.
Ask whether the assessor's office has something similar under a different name, and if truly nothing exists, set a recurring calendar reminder every few months to manually search the public
record for your own property. It's more effort, but it attacks the exact same weak point, the time between filing and discovery.
Let's pause on who actually gets hit hardest, because it isn't random.
Vacant land, rental properties, homes under renovation, and estates tied to elderly or absent owners tend to sit unwatched the longest.
If nobody's living in a property day to day, nobody's noticing when something changes about who owns it on paper.
An heir living 3 states away from an inherited house, an investor with a dozen rental doors, a snowbird who's only physically at the property 4 months a year. These are the profiles that
Give a forged document the longest possible runway before anyone looks twice.
That doesn't mean occupied. Owner lived-in homes are immune. The Florida case we just walked through was exactly that, a lived-in home under active renovation.
It means the clock varies enormously depending on how closely you're already watching your own paperwork.
Now let's get practical about what happens after an alert actually fires, because this is where a lot of people freeze.
You get a text or an email saying a new document has been recorded against your property. Your stomach drops.
What now? Step 1. Don't panic. Click a link inside the notification itself.
Go directly to the county's official record search, type the URL yourself, or navigate from the county's own homepage, and pull up the document independently.
Step 2. Actually read what was filed. Is it a mortgage satisfaction from your own refinance last year?
A lien release you forgot about. Sometimes an alert fires for something completely mundane, and that's not a failure of the system. That's the system doing exactly what it's supposed to do.
If the document is genuinely unfamiliar, a name you don't recognize, a transfer you never authorized, that's when you move fast and move smart.
Contact the recording office using a phone number you find independently, not one printed on a suspicious notice.
Loop in local law enforcement. If you have an existing title insurance policy from when you bought the home, call that insurer immediately, because fraud and forgery coverage is often part of what you already paid for at closing.
And may never have used, and strongly consider a real estate attorney who specifically handles title disputes. This is not a general practice lawyer's typical Tuesday.
Let's also be honest about something the alert cannot do, because overselling it would be dishonest.
An alert does not freeze the property. It doesn't put a legal hold on your title.
In the window between the alert firing and you actually contacting authorities, a fraudster could theoretically still attempt to move fast, approach a buyer, apply for financing, try to close.
Before anyone stops them, speed matters on both sides of this. The alert buys you the chance to move quickly.
It doesn't move for you. An alarm doesn't put out the fire. It just means you're not asleep when it starts.
So what does actually stop a fraudulent sale or loan from completing? Usually a combination of things working together, a title company doing its own diligence during a sale, a lender's underwriting process catching inconsistencies, or you personally filing something.
With the county, like a notice of disputed title, the moment you learn something's wrong, none of these are guaranteed.
All of them work better the earlier you're aware. Quick tangent worth having, because people ask this constantly. Does regular homeowners insurance cover this?
Generally, no. Homeowners insurance protects the physical structure, not your legal claim to own it.
That's specifically what title insurance is for, and if you bought your home with a mortgage, you likely already have an owner's title policy sitting in a drawer somewhere from closing day. Even Though the lender's policy expired the day you made your final payment, dig that paperwork out, know what it actually covers.
It might already be doing more work for you than the free county alert. The two are not competitors, they're a team.
Here's the psychological trap worth naming out loud, because it explains why smart, careful people still get caught off guard.
Paying off a mortgage feels like finishing something. Your brain files it under done.
The monthly statement stops, and the absence of that statement becomes its own quiet reward. You stop checking because there's nothing left to check. But the county record doesn't share your sense of closure. It stays open, searchable, and editable by anyone who can produce a document that looks routine enough to pass a formatting check.
You wouldn't run a brokerage account with 0 login alerts and just hope nobody touches it for 30 years.
Your paid-off house deserves the exact same baseline vigilance, not because it's suddenly dangerous, but because it just became the largest asset in your life that nobody's actively watching for.
You anymore, the debt is gone. The vigilance shouldn't be.
One more thing worth knowing before we wrap up. Coverage is genuinely uneven across the country, and that's frustrating but important to understand. A handful of states actually require, by law, that counties offer some form of free recording notification, meaning if you live there, this isn't optional for your local office, it's mandated. Plenty of other states leave it entirely up to each individual county, which means two people living 40 minutes apart could have wildly different levels of protection simply based on which side
of a county line their house sits on.
That patchwork isn't an accident of laziness. It reflects how differently states have historically treated property recording as a local versus state level function.
But patchwork or not, it puts the responsibility back on you to actually check, rather than assume your county automatically has your back the way, say, federal deposit insurance automatically
covers your bank account. Nobody's mailing you a reminder that this gap exists. That's precisely why we're spending 20 minutes on it right now instead of assuming it's common knowledge.
And if you're sitting there thinking, surely my state is one of the ones that mandates this,
and maybe not, and that's exactly the kind of assumption this entire video is built to gently dismantle.
The homeowners in the strongest position aren't the ones who guessed correctly. They're the ones who spent 5 minutes confirming it instead of guessing at all.
That's the entire difference between hoping you're covered and actually knowing it. There's also a trend worth flagging honestly, without exaggerating it into a panic headline. Reported real estate and title fraud. Adjacent complaints have generally trended upward over the past several years, and industry analysts point to a few converging reasons. More public records have moved online and become easier to search remotely. Notarization has in some places shifted toward remote and digital formats that create new verification gaps, and the sheer dollar value locked in.
Mortgage-free homes has grown alongside home prices generally. None of that means the sky is falling.
It means the incentive for this specific kind of fraud has grown at roughly the same pace as home equity itself, which is exactly why the response needs to grow with it. So here's the actual takeaway, stripped of the scary stats and the courtroom drama. Deed fraud is still relatively rare compared to things like card fraud or basic identity theft. This isn't a reason to panic.
It is a reason to spend 5 free minutes doing something almost nobody does. Check whether your county offers a title alert, and if it does, sign up today, right after this video ends.
If this walked you through something you didn't fully understand about your own home, that's exactly the kind of video winds of thought exists to make. So if it helped, hit like. It genuinely helped.
This channel keep making deep dive breakdowns like this one.
And if you've already got a title alert set up where you live, or if your county doesn't offer one at all, I want to know, drop it in the comments, because that map of who's covered and who isn't
is honestly more useful than anything a single article could tell you. Your last mortgage payment was a real win. Just make sure the county's copy of your house still agrees with you. One last thought before you go, and then I promise we're done for today. None of this is meant to make you distrust the entire system of public property records. That system, imperfect as it is still what lets you buy, sell, inherit, and borrow against property.
The first place, every homeowner in the country benefits from a recording system that's fast, low friction, and doesn't require a notarized blood oath for every routine transaction.
The 5-minute fix we talked about today doesn't fight against that system. It works alongside it. It's the one small patch that turns fast and trusting
into fast, trusting, and still keeping an eye on things. That's not paranoia. That's just what maintaining any valuable asset actually looks like once the initial excitement of owning it wears off.
If you made it this far, you now know more about how title fraud actually works than the vast majority of homeowners who could be affected by it, including, statistically, plenty of people you know.
Personally, consider sending this to a parent, a grandparent, or anyone you know who owns their home outright.
5 minutes of their time today could save 18 months of theirs later.